works out. So far, nothing has worked out for us. So when you think about what has happened, there's been over 6 months of absolute crazy. And I will tell you right now, I've done the same slide deck yesterday twice, and it took me an hour and 15 minutes to go through. I'm gonna do the same one in 30 minutes. And not only that, I could have gone longer. There's been so much data and so many things happening. You could guide me a little bit if you have a different questions or how you might want to have a conversation that's useful for you. I will say there are a lot of people that are online. We wanted people to come online if that's their choice, but use that hashtag, start communicating. And to get you going, I thought I'd put up here, what was your favorite hashtag of 2020? My favorite is doom scrolling. How many people know that? Okay, no one, so you don't have a lot of social media people. All right, but doom scrolling is, and you all did it, you probably did it this morning, you get on your phone, what's the next doomsday news of 2020? You're always looking, it's always something new, right? You all have done that. I asked my 2 teenagers what their favorite one was, and it's quarantine, really fits Kansas, as maskne, which is mask acne, which is a big thing going on for teenagers. Do your teenagers, they probably know that. They're already, with you doing social media, they're probably way on to that, right? So put your favorite on extra points if you can come up with an economic related one. There are some ones that trended. You just have to be nerdy like me to really follow those things. Okay. So last year's forecast, this is what I did last year. I always do this to keep track. What was I thinking? 0.6% growth for Kansas? Well, actually, I spent all of last year, if you remember, I was so worried, when's the next recession? When's the next recession? I did a survey of businesses. The majority of businesses came back and said, we're going to have a recession in 2020. But I asked why. No one could give me a reason why. I even asked you guys, what will be the reason for a recession? I think someone in here came and told me it was going to be cybersecurity or something like that would have been the cause for the recession. Well, I had a lot of great ideas. Over 1,000 people I asked, and no one really could give me it was going to be COVID. So no one got it, but there was definitely concerns about a recession. We just didn't know why. So unfortunately, it didn't happen. My theme last year was a health checkup. Remember blood pressure and all these things. And I said, look, the fundamentals are behind us. Matter of fact, I thought, although we were going to have a massive amount of growth in employment, I thought the economy was going to really pump and really do really well this next year. A lot of healing from the previous few years, but that didn't happen. So there you go. So I was thinking about the theme this year, and there's only one thing came to mind, right? It's a Shakespearean tragedy. It feels like hope has been destroyed, and there's negative thing after negative thing. And every Shakespearean tragedy, go back to your high school literature, right, has 5 acts. So I separated into 5 different sections. And if you think the first one, supernatural forces, if you think of Macbeth, it was witches. Hamlet, it was ghosts. 2020 is what? It's COVID, right? So I thought I would first talk about COVID and how it's impacted us. In particular, I think we should pause. You've done all that doom scrolling, right? You look through what was the negative news next. What's the negative news next? You heard a lot of stuff. So I thought I would kind of re-put a new basis. Is it true or not kind of thing? All right, the first one is you heard this hard hit industries, and I made this simple. If January was 100% and you move towards April, that's where it is. So the hardest hit is leisure and hospitality. It went down 49% all the way down to, it dropped 49% down to 51% and has been coming back up. This sector right here in finance services, bankers were too busy doing PP loans and refinancing mortgages to know if they even got fired because they were working overtime trying to get things done, right? They were just too busy to really be impacted. Now, there's a different story when you look at different groups of people across the state. And there was some good news about this, and it is actually true. Women were hurt more than men. If you look at by age, lower education was hurt more, and minorities were hurt more as well at the national level. Why? You actually go back to the previous slide. It's those industries that were hardest hit also tended to have people in those segments, so they're the ones that were the ones that got unemployed and got hurt the most. Now, there's some trends that's been going on this year. We have teleworking. I'm sure, how many people are teleworking? No one? Back in April, we went home and we've been home nonstop. Actually, you're talking about the first time. I have not really put on suits or anything. I've been wearing sweats for months now. Urban de-densification, which is not only happening in New York, if you've heard the New York stories, but it's happening in Kansas and Kansas City and Topeka and even towns yours where people are getting a little bit less densified. You have this automation forcing, replacing some of those risky jobs and putting more automation to it because there's too much risk, right? You have all this going on. There's a conversation saying, if this happens, can you hear me? Okay, if this does happen, these trends in these urban areas, like you that office professional services, the support staff, that's where you have this upward social mobility. That's the secretary, that's the security guard, that's the people in leisure and hospitality supporting them, where they take those jobs and they get education, and then they have that upward social mobility. If this happens, those jobs disappear, and that means we have a bigger issue on board. However, if you remember Shakespeare, the beginning of the play is always different than the end of the play. And I don't think we should look at the rearview mirror. Matter of fact, if this happened last year, I would say, oh no, we have some issues. We've already had issues of upward social mobility and income inequality. This is going to further make a problem. I'm actually going to twist this a little bit and give you a different point where I think we're actually going to have some new opportunity than we had before. Yeah. They're moving, so great. They're moving, and let me pause. The data is sketchy, so moving trucks is the best one that you can get right now to see where people are moving. And you can see some in house prices is telling you a little bit of a price signal. Maybe Stan can talk more. I don't know about all the house price signals here, but on the national level, yeah, you can see people are moving out of really dense areas. They're getting up and moving. House prices in like in New York, and you got a California, not where you're at, but some parts of California dropping by 50%. New York's dropping. So you see there's the shift in demand getting out. And it's not just the big cities. There's also other smaller cities where you have this demand shifting to the suburb type deal. But I'll let Stan get more into that than me. All right, so we're gonna see, I'm gonna give a different shift. Now, this one I think is absolutely crazy. I want you to look at this. Personal income went through the roof in second quarter. How many people would have thought income went that high? And I want you to look at the scale. I didn't do anything to the scale at all. There's zero. There's nothing funny going on that scale. Income went up really high. The components of income, I didn't show all of them. I just showed the biggest influencers. One is earned income, wages. Go to work. It dropped. This makes it look like it dropped a little. It dropped a lot, by the way. Wages dropped a lot. However, the other one that really influenced it was transfer of payments. What was that? Federal government and state government unemployment insurance claims, right? It doesn't matter if you're Republican or Democrat. Economists have studied this over and over. It's the most effective and efficient tool for stabilizing an economy. It put cash into people who need it immediately. So I want you to think back. Over the summer, when we got out of the lockdown and you started moving around, the economy started feeling better, right? You saw cash moving around. People were shopping. Even when in the fall, people were still shopping. Keep in mind, this is heavily influenced by all the cash in the economy. Now, this is quarterly because that's the only I could show for Kansas. If I look at monthly, when unemployment insurance dropped in July, the federal, all this started dropping, right? And even state started dropping. Then you get to August and September, and it's just going down. But households are still feeling good. So why? During this period, people in upper income they had all this extra cash, they had savings started going up, and they've been spending down savings the last couple of months. So when the Federal Reserve came back last week and said, it is critical, you've got to do this federal stimulus, it is because we're about to run in a wall. And who's going to be hurt? Go back to that slide on those people that were hurt, those same sectors, those same people. If cash stops moving, all of a sudden the economy is going to just come right to a halt because we still don't have a lot going in the economy to keep it going on itself. All right, now the impact on Kansas. If you look at employment, I have great news. We had lost less jobs than the nation. And if you heard me when I was asked in April to do an impact study. How much are we producing and then how many jobs? I said, it's going to be pretty high. It's going to be more than the US, I think, in Kansas. We updated our forecast in May and said, I think Kansas is going to decline by 10.2%. I think some areas like Wichita is going to decline a whole lot. So I was wrong on the employment side, but I don't think I was actually that wrong, which I'm going to prove to you later why I don't think I was wrong. But let me tell you why I was wrong. I had to make some quick assumptions back in April. I said that Kansas was going to get the same number of PPP loans and federal stimulus as anyone else in the nation by per business and per capita. I was absolutely wrong. And I'm glad, right? We had a whole lot more PPP loans because of our small and medium banks who had personal relationships, and we had hard hit industries. They were very effective, and that helped save a lot of jobs, right? We kept a lot of cash there to keep those jobs up. And even the federal stimulus checks. If you want to know those slides, I got some slides on them to show you. We had a lot more federal stimulus checks than everyone else, just because the way we file, we were just more on top of it. We got more cash, so that kept our cash floated a little bit more. Another one, and which I'll show you later, our businesses were better financially capitalized. We had more cash on hand than the nation. And when I did a panel discussion, I asked about labor. They said, we were already tight labor. I needed my labor to move. I want to keep them because I need them to move forward. So we had those factors that prevented us from doing all the layoffs. But now you'll notice this, the US laid them off, and the US is slowly starting to improve, right? Kansas held on to them, and you can see the markets in Kansas and over in these regions are now doing some more layoffs, which I'll give you more of that story in a minute. All right, if we're thinking about economic cycles, normally we have an economic bubble, it bursts, and you can clearly see the problem, and the market starts fixing itself immediately. That is not the case here, right? We are on the dark shadow of COVID. We will not have a full market opening until we have a vaccine and dissemination. I love the good judgment. If you want to look this up, they get paid for accuracy, not necessarily know anything about it. They just go and do lots and lots of forecasts daily. You should go check it out. Right now, they're saying 53% of them say that we're going to have a solution by the end of the school year, another 38% the beginning of next school year. So if you're a business that deals with in-person transactions, this is going to hold over the economy for at least the end of this school year, all the way to the beginning of next school year, before we have a really good, clear opening of the market for that. All right, so the first act I said, supernatural forces. One thing about Shakespeare, do you guys like Shakespeare? I'm not getting much, all right, okay. Not getting a lot of feedback for the audience here. All right, so one thing about Shakespeare is he never lets a supernatural force to be the theme of the story. That's not. They only uses it to look at our hero and find out where their character flaw is. So you think about Kansas, we have issues with our labor market, and COVID lets us see it. We shouldn't let it take over. You as your business, although it feels like every day it's that word COVID, 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 it's not your business, right? It's just going to show you issues within your business, issues within your labor market, issues within your sales, right? So that's where I get over to character flaw, right? Let's think about what's going on to the household side. First one's unemployment. Unemployment in the US level went up 14.7% and it came down, right? Another way to look at it, we lost 22 million, we've added back 11 million, right? So we're improving, but we still have 11 million people at the national level that are unemployed. Right, so a better lens, I think this was really neat. Look at initial unemployment claims, and all I did is take it by per thousand worker in that sector. So for construction, all the way back in January, this is a labor market. The highest one was construction. So for every 1,000 construction workers, 5.6 people had initial unemployment claims. This is not seasonally adjusted, right? This is a sign of a very tight labor market. There was no one available back in January to work. Now, even construction, that's, if someone knows construction, you can say weld or framers and things like that, they still weren't even available, right? Very, very tight. Move forward to the peak right before April, where you can see a very different story. In manufacturing at the state level, almost 85 people in manufacturing had initial unemployment claims. You go down here to the highest one in accommodations, over 92 people per 1,000 had initial unemployment claims. This is a market where we had a shutdown, right? Move forward to almost today, it's a very different market again. It's a very different labor market. It's shifted. And I want to make those three different distinctions because when we think COVID, we're wrapping it all together, but it's dynamically changing all the time. Those people who are impacted here are different than the people who are impacted here. Matter of fact, these other sectors are now finding demand wasn't as strong, and that's where we're seeing more layoffs in these other sectors relative to those hard hit ones before. If we go forward to January, it's going to be a whole nother labor market again. Now I did this kind of gives us a picture here, initial unemployment claims. I did it per thousand again. We get a different story in Kansas than we did in the nation. First, gender, both males and females were high. Remember I told the labor market's changing? Now males are being impacted more. Why? It's manufacturing. Manufacturing is just getting hit really hard now, which is a unique aspect for Kansas, and so it's been going up. Go look at for gender or for race. Race at the national level, it was minority. Here is a different story. It's black that's being hurt the hardest, and it's coming up. Actually, other races were doing really well. Go look over there. This is actually the most interesting part. You're thinking younger age because that's what we saw and that's what we heard in the news. Look what's happening in Kansas. People later in their career are the ones that are being laid off. Now, this is not volume, this is concentration, right? And those people with higher levels of education. So in markets like this, I remember we've talked about this here before, talked about how hard it was to get some skilled labor. Let's switch this, right? This is your point when you were tight the last few years and you couldn't find that skilled labor. This is the opportunity to hire someone up if you still need them, right? You can get that person now. When it was so tight before, the labor market opened up with skills today. All right, the census did these surveys of households. They look at depression, anxiety, finances, a whole bunch of them. I could have showed you all the slides, they're really beautiful. But all of them, they showed that all of them went up. Obviously, some have came down, some are getting higher today. In each one of them, I was trying to tease out, where's Kansas? Good news? In all of them, our households were doing better than the nation. So good news, except for this one. So that's why I showed it here. Food security. Matter of fact, if you were laid off or furloughed, and we had a lot of furloughs in Kansas, and you get to often not have enough food to eat, that's an issue. So as a community side, that's an issue, right? If people are not getting food, what's happening to crime? How are we getting them re-engaged? What's happening to the kids getting food to have nutrition so they're doing well in school, which is already a struggle, right? There's a side to this. How do we get them reintegrated in the labor market when there's food insecurity issues? All right, if you've been to any of these events in the last 11 years that I've been doing them, you know that unemployment just doesn't tell the whole story. So I love looking at employment population ratio because you can't hide. I take everyone who's employed and everyone who's over 18 and divide the two. And then I can see if you're discouraged, you're at home and you stop looking for a job, you're still in it. How do you read this? Back before 2008, we were up around 52 or a little higher. Every market, Kansas, everyone's higher than the nation. We hit 2008 recession, it dropped, Kansas dropped much more. We lost a lot of people who were out there and then just stopped looking for jobs. The nation kept improving. And then Kansas finally started improving really at the 2017, 18. Our labor market was coming up, but we never got to that point. This is why I kept saying there are people still out there. It's just they're not fitting the jobs that you want. There's going to be some training and some wages and some re-engagements to do it. And you see across the market, there are different issues. There's some labor issues. What do you should look at this? First, Kansas City, by the way, is a tight labor market. That was a clear definition right there. You have room just moving up, and you have room from where you were in the peak. There are people out there. And I know what some of you are thinking, because I've had a lot of conversations now at 4 or 5 different locations I went to. In our panel discussion, employers are saying, this does not make sense. I have jobs. I would love to hire someone, and I cannot get anyone to fill that job. However, you also probably know someone who's on the other side of the story, who's over here and is a household. I've been putting my resume out and they're over and over and I cannot find a job. So what is the mystery? Why are they not matching? Now, a lot of people keep thinking that unemployment benefits, those federal benefits, that $600 that came from the federal government, we could have a great conversation if it was too much or too little. Actually, I'll tell you a side story. All the way back when they were proposing this $600 at the federal level, we did a model and took that and the state benefits and found 78% of Kansans were better off on unemployment claims than actually working. But we were shocked. I was super worried that that was going to be a problem. However, economists at the national level already said, there was a lot of worry about they would be rent seeking, looking for that free dollar instead of going out for the market, being actively engaged, right? But economists at the whole say that really hasn't affected the labor market because fear. Everyone is afraid I wouldn't have a job after that. I have to pay for food. I am in Those people who really were hurt had to have the jobs. Those people who weren't hurt, who worked from home teleworking, it just wasn't even an issue. There were ones that weren't laid off. So unemployment benefits dropped in July, and we've noticed it hasn't really changed the labor market, right? So that's not really the answer. It's actually an easier answer. We had such a jolt to the labor market. It was such a shock to the labor market. It was so fast, it was so big that it's like getting ready for Thanksgiving. You have a puzzles, people do puzzles. Imagine 2 sets of puzzles throwing me on the same coffee table, and you've got to first sort out the puzzles, like 2 different regional economies or 2 different industries, and then you got to put it back together. Why? When you look at that employment population ratio, some markets were still way below. It takes years for them to recover. Why? First, the business has to know really what are all the jobs I need and want. Then they have to start increasing the wages because they can't find them. That's the price signal. Then households have to say, oh, I'm over here, but I have the wrong job and skills. I have to go get education. Well, none of that's happened yet. It's going to take a long time for that healing of this labor market and matching to come back. So it's really supply and demand are not equaling within a region or within an industry. That is the real problem. And we've lost jobs that will never come back. Most businesses are not used to that. Last several recessions, we laid people off and brought the same job back. We don't know, what it feels like when we laid people off that are not going to come back, or I need someone with a different skill set because I implemented all this new software. I don't need the other person who can do typing anymore. I need someone who can do this other software, right? It just shifted on us. All right, when we get a broader view of the whole state, I have 2 different stories for you. One story is urban, who took a big hit and is coming back up and still way below. The other one's more rural across the state, where they're almost back to 0 or actually above. You're talking about where people are moving. Now this doesn't show that, but I know the last few years, rural parts of the state, by rural definition, I'm taking everyone that's not in Topeka, Kansas City, and Wichita, those parts of the state were struggling to get people, struggling even more so than the urban areas. They're like, you can't get skilled people. Guess what opportunity is now? There are some of that matching opportunities where people could go out there. That could be part of the solution why they went up. They finally filled the jobs. If you go out into an area, they might say it's 1s and 2s, it's not lots and lots of people, but they might be filling some of those jobs they've had out there forever. They could grow if they could just get another person. So that could be solving our own problem, matching that labor market. All right, Act 3, the dichotomy of good and evil. You think about Macbeth, right? Macbeth started off as really good, and it was the supernatural forces just continuing to weigh on him, those witches, and then he turns evil. I'm using this idea to say we have great companies. I mean, some really great companies, great industries in the state. If we continue to move on that length of this COVID, we're going to have sectors that are going to just start failing if we don't go think about them more strategically as we move forward. All right, this one is the no-no of all no-nos to put on a slide like this group because there's just too many numbers and too much, but it's so beautiful. I wanted to put it on here anyway. So first thing you should know is the higher you are on here, those are the sectors the most impacted. On this side, you can see just the year over year, simple. Year over year employment, April hit, and you can see in Kansas, arts and entertainment dropped even more, right? Pretty high. And even today, well, August, it was still down from where it was a year ago, right? Struggled. And those remain struggling if you look year over year. If you look month over month, it dropped, but actually it kept healing. This is why I said the markets keep shifting. It's not the same COVID economy, right? And now these sectors down here said, whoa, we're coming back, but we're not coming back fast enough. Or I should have laid off more, and now I'm laying people off now, right? It's just shifting. I wanted this picture to show where are we losing jobs now, or where we continue to start losing jobs are going to be in some other sectors, not necessarily up here where the hard hit ones we kept talking about in the national economy. All right, I've been waiting for to talk about this one. Remember I said, wait, I might actually be right about our forecast about the impact? That was on the employment side. I was on the employment side, but on the output side, with the value of what we produce, the nation declined by 31%, Kansas declined by 30.3%. Right? Matter of fact, when I did my output, on the output side, I said manufacturing is going to be the hardest hit. All the issues, the supply chain and the trade issues and just-in-time issues. On the durable side of manufacturing, tons of issues going on there. Demand is going to be diminished for a while. I knew that was going to get hit, right? Even healthcare, I had healthcare on there. All those elective surgeries actually came out pretty high. Oh, wow, yeah, I ate that up. So, and I was actually pretty right. You look at per person, we're holding on. The nation's more up in these other sectors. They're up, they're hiring back, and they're moving forward. What's going to happen to Kansas? Well, we're going to still have demand just in time. Just in time made us efficient. Now it's making us inefficient today. A big issue. Businesses are, when you think of profit margins, they said, hey, we expect prices to stay the same and profit margins are going to weaken for businesses. They're going to struggle going forward, right? They'd have less money going forward. So there's some issues for the company side. Our forecast, although we're showing growth, this unfortunately is not going to tell you what's really going to happen this next year. Because you could be in a sector that's growing and you would make one small financial step and you can go bankrupt. So this is where you have the economic development system, the bankers, the community, and then other businesses supporting each other, really finding out what's going on, because this doesn't tell you the volatility that will happen in the economy. I think you're going to have you're going to have bankruptcies in sectors that would have been doing well. Fate and fortune, Shakespeare always likes this idea of predestination, but the hero gets to choose their way. Think about Macbeth, chooses their way. The business community, they were not like Macbeth. When I talked to them, they were very overly conservative, actually, right? They weren't overly ambitious like Macbeth. What was their forecast? They said wages are going to come up. I was shocked by wages improving there. And I asked them why, and I want to make sure I share this, is they said, hey, the labor market's different than a couple years ago. This is not the high skilled person that I'm going to increase wages. I'm going to increase wages to middle skilled and low skilled. Remember that social mobility? I need that person. The dynamic has switched between who we really need and where we're going forward, and I'm going to have to train them a little bit. So I see a different look. Our forecasts for wages are flat because we're losing high income, but we're having this up movement. This looks really positive for our retail sales, but it's not, because the nation's retail sales are higher. We're going to improve, but we have pent up demand just trying to get back to where we were before. Businesses said, going forward, a big chunk of them, we're still going to do more layoffs in Kansas. Most of them are going to stay the same, but there's still a lot of companies going to do more layoffs. Our forecast, this is unfortunately the widest forecast that we put out, but you have to know this, because on the bottom scenario in our econometric model, we said there's a stimulus, but we have shutdown, school issues, not a clear vaccine coming out anytime soon, and sentiment remains negative past election, right? And then we're going to go zero or a little bit of growth in Kansas. On the other side is we get a vaccine, no big outbreaks, and then all of a sudden you can grow by 1.1%. So as you're watching, you got to keep track of what's going on in the economy. Here's more of a 5%. This is the middle of the two. And I think the second quarter is where we're going to get the big bump up, and then it's going to be flat. The cumulative effect, nowhere near where we were in January, but we shouldn't expect where we were in January. Paradox of disappointment. So one thing that Shakespeare likes to do, one human nature, we love hope, and he just crushes that hope, and it's just fun to watch him crush. I won't crush it. People ask me which recession best looks like this recession. There's not one, but if you go back to the Black Plague, there's the best example. They lost half the population in some places. They had all these other really shuttering the economy. But what happened there? During that period of time, the feudal system, they had kings that had all this wealth. If you're a cobbler, only your great-great-great-great-grandson could be a cobbler. All of a sudden, you lost half the population. A farm worker could move over to be a cobbler and train, had the highest increases in wages. They had the 100-year period of the economy being really strong after it. And because we had this growth in this middle class and upward social mobility, we won't be as dramatic as that, but I see that as the issue. The last couple of decades, we had this decreasing middle class, we had this increasing income class, and Republicans and Democrats are saying this is actually not healthy for the economy. What's going on? I think there's going to be a shift back to more of this upward social mobility. We need that labor. It's going to make some training, but we can also grow faster by doing that. Entrepreneurism, this is just business permits growing really fast. This is another good sign. We see some optimism on the horizon. Another thing, business keeps saying they don't like teleworking, but you got to think about it differently. Here's a silver lining. Teleworking just opened your labor pool, particularly rural areas. You just use the technology to telework and just changed your rules to do it. You can now get someone with disabilities or transportation issues, or they can work from another town, still living in Wichita or something, and can still do work for you. Removal of rules. At the national level, we can now use telehealth, but inside the business, look how many rules you had that's slowing you down that you just removed inside the business. I think this is where you switch from our large companies to, which has been dominant at the national level, just taking all the control because they were just efficient to do it. Where now you have smaller businesses and medium-sized businesses that had reduced the costs, could be more nimble, new consumer markets out there, and they could find them because they got a labor pool to get to it, right? I think that dynamic could shift a little bit. And we had all this software, we had very little productivity over the last decade. Now we have that software, we embrace it, we could actually see increased productivity over this next few years, because if we start using that. All right, I'm done. So I'm probably right out of time, a little minute or two over. All right, if I was going to say anything, lots of creative destruction. There's going to be lots of losses and growth in different sectors. If I was going to really say one thing, it's going to be tough over this next year. We need to embrace that. But I bet the best way to say this is ad astra per astra, right? That's going to be the best way. It's going to be difficult, but we can make it forward. So with that, thank you very much, and I'm going to turn it over.
Our next presenter, Dr. Stan Longhofer, with the Local and State Real Estate Outlook. He's the founding director of the Center for Real Estate at Wichita State University. Please join me in welcoming Dr. Longhofer.
Do the little swap off of microphones here. So that, make sure. And I will go ahead and remove my mask so that you all can hear me well. Very good. Thank you so very much. It is a great pleasure to be here again today. I always love this, a beautiful facility. I always love the view that we have here from the main dining room. It's a really lovely place to be, so I enjoy it. And I'm very happy to present my housing forecast. As you know, every single year, the Center for Real Estate does an annual housing forecast. And I left it at the table here. Let me grab it real quick. At your place, you should see a copy of our Salina County housing outlook. While we don't formally forecast each of the micropolitan areas across the state, we do try to provide a snapshot or an overview of what's going on. And so encourage you to take a look at that and take advantage of it. I'll talk about some of the things in there. And I want to give a special thank you to Credit Union of America. They are the sponsor for the Salina County Housing Outlook. And so it's because of them that we have the nice printed copies that are available for you. And so we're very grateful for the partnership we have with them. And I also have to give a thank you to all of the realtor boards across the state. We have a contract with the Kansas Association of Realtors, whereby we have access to every multiple listing service in the state, including those that are associated with the Great Plains Association of Realtors, headquartered here in Salina. And we provide them then with monthly MLS statistical reports, which give very current real-time information on the state of the housing market. And so if you are interested as you go forward through the year of what's going on in the local housing market, I'd encourage you to talk to the Great Plains Association, and they can make those reports available to you. But it's because of that relationship, we also have access to the data that allows us to do our annual housing forecast. So we appreciate that partnership. And so when I do our annual housing forecast, I always start with the labor market fundamentals and the mortgage market fundamentals. And this is a slide from the presentation I gave here last year, where I said current fundamentals are really solid. Labor market is strong. The mortgage financing is widely available and cheap. But I gave a caveat because there just felt like there was something that was sort of like, when's something bad going to happen? Because something bad just has to happen. And so I said all of this could change very quickly. I had no concept whatsoever how it would change or how quickly and dramatically it could change. It was absolutely stunning what we've seen. And Jeremy's talked about the labor market situation. And if I had to summarize what I take away from that in terms of how the labor market is impacting or will impact housing markets going forward, so far it's been not much. And I'll show that to you in some slides. But I do have concerns as the recession continues to expand and impact other segments of the economy and other sectors, that the impact on the housing market may come forward next year and then going forward. So we'll talk about that as we go forward. The bright spot for housing markets has been the mortgage market. And last year we said, mortgage rates, they're not going to go up, but they're not going to go down any further. It's just not possible. And every time I say something definitive like that, I'm proven wrong once again. So I need to stop saying things, but man, mortgage rates that have dropped below 3% for 30-year fixed mortgage rates. I think some of you have seen you can get 15 and 10-year rates down closer to 2% than 3%. Really stunningly low rates. Mortgage Bankers Association's forecast is that the 30-year fixed mortgage rate will stay below 3.4% through the end of next year. And this is all due to the Federal Reserve, again, ramping up their purchases of mortgage-backed securities, which is really driving down. One of the things that I'd note on this is that the blue line at the bottom is the 5/1 adjustable rate. That's a mortgage that is fixed for 5 years and then adjusts annually thereafter. And typically there's a spread between the 30-year fixed rate and the 5/1 adjustable rate, because mortgage lenders are starting to bear interest rate risk with that adjustable rate. But you'll notice here now, there is absolutely no difference between the 30-year fixed rate and the 5/1 adjustable. And again, that's because of the actions of the Federal Reserve in directly purchasing mortgage-backed securities that are really driving down those interest rates. So although there's been some tightening of mortgage underwriting standards, it has not been severe at this point. And so mortgage finance is really continuing to add further stimulus to that, what's already a very strong housing market. So what have we been seeing? Well, the blue bars on this are the home sales across the state of Kansas. And you can see the seasonality pattern here. Sales go up in the spring and they go down in the fall and in the winter. And so that orange line is a moving average, which basically just smooths out that seasonality. And what we can see here is that after a number of years of fairly healthy growth in home sales activity, we seem to have plateaued in Kansas, with home sales really kind of flattening off. And that was happening before the pandemic occurred. The reason that home sales have plateaued is not because of a lack of demand. Demand is incredibly strong out there. Instead, as I'll show in a moment, it's due to a lack of inventory. Bear with me, I'm going to grab my water so that I can keep my voice well here, and then I'll resituate my microphone. So, pardon me. Too many clips and things to deal with here. So you might ask, how is that different for Salina County and for the Salina area? And the answer is that, again, that plateauing effect over the last several years has been there, but this year there's actually been an uptick in home sales activity, a pretty healthy uptick in home sales across the Salina area. And so, again, housing market demand is really strong. Matter of fact, one of the things that I say in our full forecast booklets for all of the major markets, by the way, there are copies of those booklets in the back of the room. You're welcome to pick those up. But one of the things that I've said about those is, from looking at the housing market, you wouldn't know that we're in a recession. Realtors are incredibly busy and fielding tons of calls. And the only reason sales are not growing stronger is because of a lack of inventory. Our forecast for home sales across the state of Kansas this year is a slight increase, a 1% increase. Again, that's really reflecting some of the, it would be stronger if it were not for the fact that there aren't enough homes available for sale. We're forecasting a slight decline next year. That's due to two factors. Number one is the tight inventories and simply not, you can't sell a home if there's not a home that's listed for sale. And number two, we're forecasting a slight decline because I believe that the impact of the recession is going to begin to filter through to other aspects and other segments of the economy that will begin to taper off demand a little bit. But demand is so strong, that's not going to be a big major decline. And so I mentioned that the inventory of homes is tight. So here's the picture that shows this. We measure inventories with a number that I call months supply. And to do this, we take the number of homes that are actively listed for sale, and we divide it by the number of sales on average over the past year. So if there are 1,000 homes listed on the market right now, and on average, we've been selling 200 homes a month for the past year, we would take 1,000 divided by 200, and we would say there's a 5 months supply. Now, typically, we think the housing market is balanced between supply and demand if we have between a 4 and a 6 month supply. So that's the shaded region that you see on this graph. A 4 to 6 month supply is balanced. And you can see the yellow line on there is Kansas, and we've been below as a state that bottom end of a balanced market since 2015. Salina has been even tighter than the rest of the state. Incredibly tight inventories to the point now where the month supply is just a little over a 1 month supply, about 1.25 months supply. Those are incredibly tight levels. And what we hear reports from realtors around the state is that when homes come available on the market and they are priced right and they're in popular neighborhoods and price ranges, then we are seeing them with multiple offer situations and selling quickly. In many instances, homes are selling across the state before they're even formally posted and advertised available for sale. Matter of fact, I've always been an advocate of using a realtor as a seller because of all of the complexities in completing the real estate transaction and the value that a good realtor can bring to make sure that that contract that you get actually closes. But I've always been a little bit more ambivalent from a buyer's perspective to say, do you really need to work with a realtor as a buyer? It's like, well, you can, you don't. There's some advantages, but it's up to your personal perspective. Right now, if you're a buyer and you're trying to find homes that are available for sale, you need to be working with a realtor because, quite frankly, most of the homes that you see as they pop up on the online sites have already sold by the time they actually get posted and are live on the internet. And so having a chance to be one of those people who gets the first early look at it is really important to be working with a really good realtor. So the other piece that's been really interesting, and this is where what I've talked about the economy and the mortgage markets, I think really comes to play. What I did in this slide is I took that same measure of months supply, but I segmented it by the list price of the home. And so I picked some arbitrary breakpoints. You could debate what's the low end of the market, the middle market, the upper market, but I picked 100,000, 200,000, and 300,000 as my breakpoints. And no matter what market you go in across the state, you pick cut points that are appropriate for that market. We see similar stories that are taking place. First of all, in the more modest price ranges, inventories have been tight for years. And the only impact that the pandemic had was to make that worse. As the pandemic and the shutdowns took place, we looked, because real estate was not impacted in Kansas directly. It was deemed an essential industry. Matter of fact, let me jump back one slide here real quick, because there's one other interesting thing. You'll notice on this, the blue line is the United States as a whole. And you can see that as the pandemic took root, the United States inventory spiked up, right? And that's because in many parts of the country, real estate was not deemed an essential activity. And as a result, home sales activity had to basically stop. You couldn't go out and shop for homes. Realtors weren't allowed to work. And so you ceased having more sales. And so that created that spike in inventories that's since come down as some of the rest of the country has relaxed some of those things. In Kansas, Governor Kelly made what I think was a very, very wise and thoughtful decision to say that real estate is an essential activity. It should not be shut down. And again, this reflects the nuanced thinking about how interconnected so many different aspects of the economy are. If you are somebody who needs to sell your home because you have to move for some reason, not having access to those services of a real estate agent could really be devastating to your ability, and then could have further spillover effects in so many other segments of the economy. And so we did not have those shutdowns. And as you can see, in Kansas and in Salina, we didn't see a spike of inventories as a result of that. But as I was saying here, we've had tight inventories across all of the more modest price segments for quite a while now. And the only thing that happened with the onset of the pandemic is that sellers, potential sellers, seemed to be more hesitant to put their home on the market. If I don't have to sell, do I really want to have a bunch of strangers walking through my house? Everybody was uncertain, everybody was fearful. And so potential sellers backed away from the market, whereas buyers who were still in the market seemed to be less influenced. And so that made the inventory situation even tighter than it had been before. But the other picture on this slide I want to highlight is the yellow line at the top, homes priced above 300,000. And what you can see is that in 2018 and 19, it was really hovering at kind of the top end of a normal range. And over the course of the pandemic, we've seen that that upper end price segment has really come down where it's almost as tight as other price segments. And I think what we're seeing here, we see this across all markets in the state. And I think what we're seeing here is this is impacted by two things. Number one, the layoffs, Jeremy alluded to this a little bit, but the economic stress of this downturn has not affected all households equally. Households that are in job situations that are at the lower end of the economic spectrum, hospitality jobs and other jobs, are much more impacted than those that are, say, in information type jobs or in office jobs. If you're able to work remotely and your business is able to continue operations, he mentioned financial services industry, it's just the employment is just going nuts. Those employees have really fairly stable and safe job prospects, and so they haven't been affected. Those tend to be the ones who are more likely to be homeowners. And so where the economic stress has happened has been in segments that are less likely to be homeowners and therefore less likely to affect demand in the housing market in general. But also, it tends to be those who are interested among homeowners, it tends to be those who are at the higher priced segments that are the most stable, the least affected by it. And when you couple that with what are, once again, historically low interest rates, every single year it seems like come in and say that, right? Historically low. And then history is set once again. These tremendously low interest rates mean that if I'm relatively affluent and I am in a good, stable situation, yeah, there's a lot of turmoil out there, but my job is safe. All of a sudden, I'm looking at those high-end homes, and maybe I'm looking at a $400,000 or a $500,000 or a $700,000 home that I never thought I'd be able to afford. And with the low interest rates, I can stretch now in ways I never could. And so that's put more demand in that upper price range segment. And again, we see that in Salina, we see that in Topeka, we see it in Wichita, we see it in Kansas City. Whatever your definition of the top end of the market is, that top end of the market is no longer what we would have called a buyer's market before. It's either balanced or moved into also being a seller's market. So when you have demand that really has not tapered off much and inventories that are tight, what we've seen is an increase in home price appreciation across the state. And statewide, we've seen kind of average price appreciation on par with the US as a whole, which is not typically we're below the US, but around 5% a year. And what's been really interesting here, the orange line on this graph are rural, what I call rural, it's not really rural, Salina is not rural, but it's a non-metropolitan area. So if you take out Kansas City, Topeka, Manhattan, Wichita, Lawrence, all of the other counties in the state, we have seen home price appreciation go from what was averaging around 2.5% a year, now up to closer to 4.5%, 5%, much stronger appreciation. And again, it's just reflecting that strong demand and tight inventories. What have we seen in Salina? I don't have a direct measure of home price appreciation that's this apples to apples comparison, but median sale price, which is the price at which half of the homes sell for a higher price, half of the homes sell for a lower price, that gives us at least some insights to it. And we can see here over the past year or so, median sale prices have gone up from around 125,000 up to about 145,000. Again, that's a healthy appreciation rate of increasing that median sale price over this period of time. So what is our forecast for home price appreciation over the coming year? We think that solid appreciation is going to continue both this year and next. 4.8% for the state as a whole this year, followed by a 5.7% increase next year, especially being driven by the Kansas City market, where things are particularly strong. The final number that we forecast for the state is new home construction activity. And for a lot of years, as we've had these tight inventories, we've been in a place where we've said, well, boy, you look at strong demand in the housing market, tight inventories, we should see new home construction come in to fill the gap. And for the most part, that hasn't happened across the state. And the reason is because existing home prices for a number of years, can't really see it here, but if you go back before the 2011, 2012, 2013, there were a number of years prior to that when existing home prices had been essentially flat. They weren't falling dramatically, but they weren't increasing either. But at the same time, construction costs continued to rise, which created this separation between existing home prices and the cost of building new homes. Well, over these years where we've seen more strong home price appreciation of existing homes, that's reduced that separation to the point where, especially at this upper middle market, say above a $300,000 price point, you really can begin to build homes now once again that are at least competitive with existing homes. And when you couple that again with those low interest rates, buyers who may have said, nah, I can't build, there's a premium for building, I'm not sure I can do that. Now they're saying, well, man, if I can get a mortgage rate below 3%, why don't I go ahead and build my dream home and make it just the way I want it? People who may never have been in the new home market in the past are looking at that. And so we're forecasting fairly strong new home construction activity. It's especially driven in the Kansas City and Wichita markets, but across most of the markets other than Manhattan, we're seeing that increase throughout the state. 12.1% for this year, and then another 21.6% increase next year. So very strong construction increases. And that is the summary of my forecast. As I said, we have forecast booklets for all of the major markets across the state available on the back table there, and you're welcome to take them with you. If you're interested in Manhattan or Topeka or Wichita, you can see what we have in those markets. And once again, thanks to Credit Union of America for making these publications available. And with that, if we have time, I don't know, we have a little bit of time, I'm happy to take some questions. I see one question there. Mhm. Yeah. Yeah, so there were really kind of two questions that were rolled into one there. One was the general challenge of workforce housing, which is especially acute across rural areas of the state, and then whether or not there's something different that's going on in Kansas City, and I'd also say Wichita, that make that different. And so, the challenge of workforce housing ultimately comes to a supply and demand issue where the supply curve and the demand curves are not crossing. A lot of times in smaller communities, people will say, oh, we've got businesses that would love to come here because we have such affordable labor, but they are afraid they can't find workers, and then workers can't buy good quality housing at what's being paid. And you hear the dichotomy there, right? Is that in order to be able to afford, construction costs don't differ that much in Kansas City versus Salina. In some cases, Salina could be more expensive because of available supply of labor for building those homes. What's different is the cost of the underlying land, right? But at a certain point, building good new housing for workforce is a real challenge in lower cost areas because people just aren't able or willing to pay what you have to pay to build that new housing and make it affordable. So that's been an ongoing problem. It's not something that's going to go away. A couple things happen in Kansas City or in Wichita that make that different. Number one, the breadth of the housing stock. Very frequently what might be called workforce housing is often an older housing stock that may be a little bit deteriorated, but still functional. And in Kansas City and Wichita, you just have thousands and thousands and thousands of those units. And as other families filter up and move into more expensive housing, that opens up what would be called workforce housing. Typically in smaller communities, even though you have some of those homes that maybe were built in the 50s or 60s or whatever, there's just not enough of them to fully make up for all of that. So I think that's part of the issue there. The other is you have higher wages in those larger communities, so that becomes part of the formula as well. Now, I did get one question earlier that wasn't related to housing. This was before the meeting started, but it was related to real estate and how, post-pandemic, we'll see businesses responding and so forth. And there were a lot of underlying trends that we'd already been seeing prior to the pandemic. One of them in retail was the move away from bricks and mortar to online activity, and that was having an impact on shopping malls and on other types of retail establishments. That obviously has just accelerated, tremendous at warp speed over the course of this pandemic, and that's something that I don't think is going to change. It's going to be a real challenge in order to really do well as a retail establishment. You have to focus on service. It's the touch points that you can provide that the online or the big box stores can't do. And I'll give an example of that I've used frequently before, which is in hardware stores, right? There was a period when we thought that the local, hardware store was going to disappear because of the big box, Lowe's, Home Depot, and so forth. And that really hasn't been the case. It's impacted things, but I think where the local hardware stores that have survived have really been able to thrive has been in providing that extra level of service and being able to provide that information. And I don't know how many of you have gone into one of the big box hardware stores and said, okay, I've got this thingamajig that I pulled out that's not fitting into my whatchamacallit, and finding that old guy who knows how to build everything that knows it. Very unlikely to find that at the big box stores. Much more likely to find somebody who's really knowledgeable about those things and direct you. Same type of issue for almost any retailer. You've got to be able to provide that level of high service in order to survive. But in the office sector, we out of time? No. Go ahead. Go get the question, and I'll come back to office. Okay. So the question is, are we seeing any migration patterns in housing data so far? And the short answer to that is, I don't actually have data that necessarily shows those movement patterns, who's moving from where to where. But my personal belief is that people don't tend to make long-term permanent decisions based off of short-term changes in events. And my personal view is that we've had a long-term secular pattern of households moving from small rural areas to towns like Salina. People moving from towns like Salina to bigger cities like Wichita. They move from Wichita to Kansas City, and they move from Kansas City to Chicago and Dallas and LA. That's the trend that we see in terms of out-migration from lower density areas to higher density areas. And it has to do with availability of jobs and availability of amenities. I don't believe that fundamental fact is going to be changed by the pandemic of all of a sudden people are wanting to go remote. We've talked about remote work opportunities as being, oh, why do people need to go live in California where it's so expensive to live when they could work remotely in some of those high-tech companies and live in Kansas and have this great lifestyle that we have. But there are amenities and there are things that people want there and that have an impact. And so I believe that's going to continue. I don't have specific data for that, but that's my belief. Let me just come back to the question about office space. The one impact that we've seen almost immediately with the pandemic is that office users had been looking at moving more and more towards shared workspace environments and using fewer square feet for their operations and for their businesses, trying to cram more people into smaller areas. And they would often couch that in terms of, oh, we're creating more opportunities for fortuitous collisions of creative activity and so forth. And some of that's true. We certainly have seen in the development side that businesses that were in process of either designing or actively building new facilities have rethought how closely, how tightly do we want our employees to be, almost immediately with the onset of this. The question is, will people continue to do the remote work and the work from home? Jeremy has said they're planning on continuing their work from home after they're done. They found it works really well. What I've heard from office users and from businesses generally, however, is that it's been a very mixed bag. The one job type that seems to have done really, really well with work from home, I've heard a lot of mortgage loan processors say they could not have gotten through all the applications they've had this summer if they'd not been able to have their employees work from home, because they seemed to be more productive and more efficient when they didn't have all the distractions of the office. But that does depend on them not having the distractions of the home. Someone who doesn't have children at home or other things becomes has some opportunities there, whereas somebody who has more distractions at home, it may be more difficult for them. On the other hand, I've heard lots and lots of businesses say that the impact of being able to build our culture, the impact of being able to have those collisions among people where new ideas, even we've all experienced it in meetings where a Zoom meeting is about to start and you're sitting here and you're waiting for everything to start. And if we were in a face-to-face meeting, we'd be sitting chatting with one another, bouncing off ideas. And sometimes really good work outcomes come out of those very informal interactions. And those are hard to replicate when we're all remote. So my expectation is that what we will see is that businesses are going to rethink some of the how tightly do we put people together, but that they are going to want to still have people together. And we could paradoxically see an increased demand for office space when we're all done, as businesses want more square feet per employees, but not fewer employees in the workplace. And now I know I'm out of time, and so I'm going to say thank you very much. And I'm happy to answer further questions later as we go forward. Did this it fell off my face. I hope you all could hear it.
It actually seems to work really well.
Okay.
Matt will introduce Crandall when he comes back, right?
Yes. Have we told him he's online?
Hmm.
Have you told him that he's online?
Don't know if I'm going to.
Can you hear me all right? Crandall, I'm very sorry about that. You didn't hear the introduction. You had a really good introduction. So can you hear me? Yes, so you can go ahead
Yes,
and
I can
start.
hear
Let
you.
me make sure. So perfect. We can hear you. We see your screen and you right now. So go ahead.
Okay, excellent. Thank you. Good afternoon. My name is Crandall Johnston. I'm a senior economist with the Bureau of Labor Statistics. I work in the Mountain Plains Information Office, and I really here at the event in Salina. Unfortunately, I'm not able to be there in person, but I'm really appreciative that we have the opportunity that I can present remotely. I'm going to be reviewing some key economic indicators for the national economy. And from Jeremy's presentation earlier, you'll see that there's a lot of trends that are very similar between Kansas and the United States. First, I'd like to start with what is the BLS? So we're an independent statistical agency that's responsible for measuring the labor market activity, working conditions, and price changes. We're part of the U.S. Department of Labor. And as you can see, our mission is to collect, analyze, and disseminate essential economic information to support public and private decision-making. And we serve a wide range of data users and communities with our various products and services. And we try to do that by ensuring that we have accurate, objective, relevant, timely, and accessible data. And one of the ways that we do that is by coming out and speaking at events like this. So how are we doing? Since last year, the unemployment rate has gone up from 3.5% to 7.9% seasonally adjusted. This is an increase of 4.4 percentage points from a year ago. And as you can see here, both employment and labor force participation are down. These numbers are also seasonally adjusted. Wages and salaries and consumer prices are both up 2.9% and 1.3% respectively. And overall, this hasn't been great news. We know that this isn't the complete story. These are just a few highlight statistics that we like to point out. Because of the global pandemic, we are seeing unprecedented changes in our data. So we're going to look into some of these numbers a little bit deeper and get a little bit better understanding of what's going on. And I'll start off with the employment and unemployment. Our monthly unemployment and employment data are collectively known as the employment situation. These data are released on the first Friday of every month, and they're comprised of two surveys. Our current population survey, or household survey, the current employment statistics or establishment survey. But why do we need two? We need to get the most complete picture, and it's not possible to collect all unemployment information from establishments alone, so we also speak with households. From the households, we're able to get more information about the individuals, such as demographic information, that we're not able to get from establishments. However, we're not able to get as detailed and accurate industry data from the households, so we speak with establishments, thus giving us a more complete picture of what's going on with the labor market. So what is the impact of the coronavirus been on the labor market? So for those of you that don't know, we actually have 6 measures of unemployment with differing definitions. The U3 measure is the official unemployment rate that is noted here in the black line. That's the one that gets all the headlines and that you'll see a lot reported. But for a person to be counted as unemployed in the U3 measure, you must be without a job, be available for work, and must have actively looked for work in the last 4 weeks for the survey reference period. The U4 and through U6 expand the official definition to include discouraged workers, all persons marginally attached to the labor market, and those that are employed part-time for economic reasons. You can see here in this chart that the shaded areas are denoting recessionary periods. And so from the previous recession across all measures, we've seen a pretty steady decline in unemployment rates. And then entering into the pandemic situation, all of these numbers have spiked up. So beginning in March, we saw only an uptick in unemployment to a small degree. And a lot of this is because the reference period for the survey is the 12th of the month, and many lockdowns began in the later part of March, so they were not immediately picked up. In April, there were massive spikes, again across all measures, and the U6 here in the yellow went up as high as 22.8%, which is the highest it has ever been in the series. And again, that's going to be the broadest definition of unemployment, including people who are part-time for economic reasons and all those people that are marginally attached to the labor force and discouraged workers. Breaking out just the official unemployment rate, the U3, we saw, again, just a steady downward trend in unemployment, reaching the lowest point since the last recession here in February, at a seasonally adjusted 3.5%. Again, we saw that small uptick beginning with the coronavirus in March, moving up to 4.4%. But as the lockdowns and the virus spread to more places around the nation, we saw that jump up to 14.7%. Since then, unemployment has been coming down, but is still elevated to levels at higher levels than before the pandemic. And as I stated earlier, civilian labor force participation rate has also declined. So we define labor force participation as the number of people who are employed and unemployed as a percent of the civilian non-institutional population. Well, what does that mean? Our civilian non-institutional population excludes active duty military members, persons in prisons, jails, and other correctional facilities, and those in residential care facilities such as skilled nursing homes. So as the pandemic began, we had seen a decline and then kind of a leveling off in the years preceding the pandemic and then drop off very steeply. It's recovered a little bit, but participation in the labor force is still low. Because of the extraordinary circumstances of the pandemic, we decided to ask a few additional questions from our households, and one of which goes to the labor force participation rate in the previous slide. Here we can see the number of people not in the labor force specifically because of the pandemic. It's out here that the numbers are in thousands. So in May, when the first data was available with this new question, this number was a little over 9.7 million people were not in the labor force as a direct result of the pandemic. In the ensuing months, there have been some declines, but those have been leveling off. The biggest decline has been from May to June. There may be many reasons for this. People were concerned that there were no jobs due to the lockdowns, and in various parts of the countries, lockdowns continued longer than in others. People had health concerns or difficulty finding childcare. I know that virtual schooling has been problematic for parents. It's been problematic for me as well with my first grader. In addition, people are dropping out of the labor force. People have been working from home more. So this is an additional question that we asked about people who are working from home. And this is as a percentage. So 35.4% of those that were employed were working from home. And this does not include people that were already on full-time telework agreements as a regular part of their job function. This is specifically, again, due to the pandemic. Again, we're seeing that there's some declines over the months that followed, but it's kind of leveling off. But there's still an elevated amount of telework, and I'm evidence of that as well as I'm doing this remotely from my home. Here we can see that many people were unable to work or are working fewer hours because of the coronavirus. This light blue bar shows the individuals who are not receiving pay, and at the bottom are in the dark blue here are people who received pay while reduced hours or unable to work because of the pandemic. The important thing to note here is that the vast majority of people that had reduced work or were unable to work because of the pandemic did not receive pay. And as Jeremy mentioned, a lot of that was offset by direct payments from the government through uninsurance and the boosted unemployment insurance by the federal government. Here is a geographic breakout of unemployment. The impact of the coronavirus, while it's been felt by all of us, has not been equal geographically. The states that are red recorded the highest unemployment rates of 11% or higher. The states that are in the light tan color are those with unemployment at 4.9% or lower. And as you can see, Kansas is in the second lowest category here, just barely making that category at a seasonally adjusted 6.9% in August. The September data for the states is going to be released here on the 20th, so next week. And then going further to explore the county employment, within Kansas, we have the unemployment rates here by county. And this map shows the not seasonally adjusted unemployment rates by county in Kansas. The darker colored areas are higher unemployment rates. The two highest unemployment rates in Kansas were in the Wichita area, in Sedgwick County at 10.9% and Sumner County at 10.0% here and here. And the third highest was Wyandotte County at 9.3% right up here in the Kansas City area. The lowest unemployment rate for the counties was Wallace County at 2.0% over here along I-70 as you're going into Colorado. And as you can see here, the western part of the state was at the lowest unemployment rates. And again, these were concentrated down here. Salina County recorded a 6.4% unemployment rate. And then here's kind of looking at the unemployment rates by the metropolitan areas. And again, we can see that not all metropolitan areas have been hit the same. Here we have Wichita being pretty high, again, with that county data. Two of the counties that are part of that metropolitan area were the highest in the state. So here you can see Kansas City, and then moving over to Lawrence, Topeka, and Manhattan, not nearly as bad as Wichita has been doing. And then some of the larger metropolitan areas within the country have been pretty heavily affected. And some of that has to do with, the outbreaks being worse in places like New York and heavily populated dense cities. But this is a great map that I was able to find from USA Today, and shows that how states are changing their restrictions. So this was updated on September 1st, and as we see going forward just a month later, here in the blue, there's a lot more blue states which are restrictions easing in the states. The green are showing the restrictions lifted, the tan are showing the reopenings paused, or the purple with their restrictions tightening. So as restrictions and lockdowns have been easing, it has been helping out the situation with employment. So this is one of my favorite charts here in the slides. It's showing in red the February to April job losses by industry sectors, and then the April-September recovery from those initial shocks from the lockdowns and the huge downturns. I know it's probably difficult to read the names of the industry, so I was going to point out some of those. And as Jeremy said, in Kansas, the biggest affected, this huge red bar, losing 8.3 million jobs across the nation, is leisure and hospitality. And we've seen that about 54% of those jobs in the April through September period were recovered after those initial losses in February through April. The next highest losses were in trade, transportation, and utilities. Here, losing 3.4 million jobs and recovering 2.3 million, again, and through April and September. Next in losses, we had private education and health services losing 2.8 million jobs in February and April, and recovering back half of those at 1.4 million. A couple other interesting industries here at the nationwide level are the government and information sectors, shown here and here. Well, the losses through February and April have not been nearly as large as some of the other industries. They've registered no recovery either. So as of August unemployment data, there were only 12 states that were within 5% of their February employment totals. Employment in Kansas is down 4.8%, and in Missouri, 4.9%. So again, through the April through August period, a lot of those initial job losses have been recovered in those states and are within 5% of the employment levels within the states in February. So this chart comes from our job openings and labor turnover survey, which measures labor churn in the economy. With the rise in unemployed persons and few jobs opening, we saw a large spike in the number of unemployed persons per job opening, but it wasn't quite as high as we saw at the end of the last recession. Some of those restrictions were pretty quickly eased off, and people were able to work, telework, work from home. So it wasn't quite as bad as far as the jobs per person, but a lot of that also has to do with the shrinking of persons in the labor force. So what's been happening with the prices and wages? Here we can see over the year changes in wages here in the red line have remained fairly steady even through the pandemic months, between 2 and 3% over the last several years. Prices, however, have been up and down, and most recently, through the period of the pandemic, dropped to an over-the-year increase of just 0.1%, but have gone back up here in the last couple months. So we're going to look at why the not just food, but why the consumer price index has been relatively low as far as the over-the-year changes. So here in red, you're going to see the overall food index, which is a major component of the overall consumer price index. And then the light blue line here is representative of food away from home. And then the dark blue is going to be food at home. So you'll notice throughout this time period that the changes in prices for food at home have been below the changes for food away from home. And food away from home deals with restaurants, things like that, whereas food at home is going to be more of your grocery type prices. Until April 2020, when prices for food at home saw a large spike in over-the-year price changes, 4.1% over the year, peaking at 5.6% in June. But since April, over-the-year price increases for food at home has been above 4%, and the food away from home in restaurants did not see a huge impact in over-the-year price changes. And we're going to drill down a little bit further into the food prices to kind of see what was kind of driving the food at home prices, which was leading to this overall food index to spike up. And so for food at home, one of the major contributors to the price increases had to do with meat. So here on the screen, we have beef and veal in this blue line, pork as this green line, poultry prices here in yellow, and then fish and seafood in red. And of particular interest, not just for Kansas, but in general, are the beef and veal prices shot up to an over-the-year increase of 25.1% in June 2020. This was due to a number of factors. We didn't see a huge increase in the demand change. What we saw was that there were a lot of supply chain issues. There were packaging issues from shutdowns of schools, which are large consumers of meat products, and things having to be repackaged. But we saw huge price swings pretty quickly, also contributing to a lot of these spikes early on in the pandemic period were outbreaks, as I'm sure you all saw, at various food processing plants and meat processing facilities. And another main component to these changes that we saw with the consumer price index. So we saw, food prices are spiking up, but at the same time, as most of you will probably know, fuel costs have been historically volatile, but they play a significant role in the CPI, all items index, and in the lives of consumers. So here we can see over the year price changes in gasoline of all types fell significantly and has recovered a little bit as we've seen gas prices going back up here recently, but demand really fell off with lockdowns, increased telework, and things of that nature, really driving these prices down at an unprecedented level than before. And that's been kind of offsetting in the overall CPI index, those prices that we're seeing in food. So what can you all do for us as BLS? Use our data. We have a wide range of data from wages, benefits, injuries, prices. We talked about employment and unemployment here. Visit our website, sign up for our tweets, give us a call. You can also help us by promoting high response rates for your employers and business associates and others, as all of these data that we've talked about and others rely on voluntary response. So if you could help us out by providing data, especially in these type of pandemic times, it's really important that we understand what's going on with the economy. And please give us feedback, both as respondents providing data to us, but as users of our data. We're constantly looking to improve our products and our accessibility. We have several research series that we're producing to drill it down from our national level data into more state data. And you can speak up for national statistics that we're trustworthy and that people need us. And if you have any questions, I'm not sure how we're going to try and do that remotely, but here's my contact information. You can email me here at BLS Info Kansas City at bls.gov or give us a call. We'd be happy to answer any of your questions related to the data here or other data that you're looking for. And with that, I'll turn it back over.
Well, I can help facilitate a question if there's some questions on the audience. And while you think of a question, I will say there is a huge importance of supporting BLS. I mean, my life depends on this data, and this is where we get all the real rich information of what's going on. So when he says the employers support employers to filing the data, that's very important. So any questions from you guys? There are no questions. Let me think if I had a question. Some great stuff on some of the inflation and prices. And I heard part of your story. I don't know if you mentioned that we also had a big outbreak, which is one of the components for beef going up. We had a big outbreak in Western Kansas, and well, more than one, and more than one plant was shut down. And so that was a big part of that price increase. Something a lot of us already lived and saw the news stories on, but half the people in here probably have cattle themselves they slaughtered and have in the freezer. So it didn't affect our prices probably as much. I see some people giving not so good views of me saying slaughter, but it is part of Kansas, right? So no other questions. Thank you so much for speaking, and we'll move on. Thank you.
Yep, absolutely. Thank you.
I'd like to now introduce you to our next speaker, Nissa Inzunza. Nissa came to Kansas Wesleyan in the fall of 2015 for the Colton, California. She made a big impact on campus, both in the classroom and on living progress. Senior year, she was part of the Disney College program at Walt Disney World. Upon graduation, we hired her at the university to work in the registrar's office, where she serves as the assistant registrar. Nissa is also a student in our MBA program at Kansas Wesleyan. I'll put a plug in there. It's a great MBA program. You can do it hybrid online. You can do it under 2 years, all for less than $15,000. If you're looking at some educational realignment for yourself and people you know, please think about Kansas Wesleyan or Wichita State School. Absolutely. So her presentation today, department class, she's been working on with Dr. Paul Hedlund, who could not be here due to illness today. But Lisa, we look forward to hearing your presentation.
Thank you, Dr. Thompson. So as Dr. Thompson mentioned, I worked on this presentation with Dr. Paul Hedlund, who unfortunately could not be here today. But I will be talking about the local development in Salina, specifically from the perspective of millennials. And so just some background information. Last year, Dr. Paul Hedlund presented to at this conference in October of 2019. In January of 2020, a group of 6 students developed the initial research focused on the Salina strategic analysis. Then in March of 2020, a group of new 6 students continued that research on Salina's development. This past summer, Dr. Paul Hedlund and I felt we wanted to focus on Salina's development, specifically on millennials' perspectives of that economic development. Throughout this project, we thought it was significant to focus on the internal, external, and customer environments. We thought it was significant to define key issues in the Salina trade area that we later prioritized and used to develop 6 recommendations that will be presented to you later today. Throughout this project, we gathered qualitative data that assisted us in creating these 6 recommendations. And it should be noted that when we started the initial research, COVID-19 was not a primary concern in the city of Salina. So it is not a primary topic of discussion throughout this qualitative data. So the first environment that we focused on was the internal environment. Salina emphasizes the importance of long-term goals. However, currently, Salina lacks representation of millennials in its population. Salina's population is currently declining because it is reliant on older generations who are beginning to age out. Millennials and younger citizens are making the decision to move away from the city of Salina and not reside permanently in our community. This is negatively impacting the community as a whole. It is important to note that in the perspective of millennials, the city of Salina offers very limited nightlife experiences, minimal social experiences for them to enjoy. In the eyes of the millennial and younger citizens, they see the city of Salina as a comfortable lifestyle, but they're looking for more of a fulfilling lifestyle. In our customer environment, it became very prominent that Salina does really well when competing against local competitors. However, when faced against larger competitors such as Kansas City, Wichita, and surrounding states, they lack the desires and needs that millennials are looking for, in which these competing cities do a lot better than we do. It's really important that we try to offer more things for these millennials so that they can see that we do offer things such as our competitors like Wichita and Kansas City. And then our third environment was the external environment. Throughout the external environment, we pulled elements from the environmental scan, such as politics, the economy, sociocultural elements. Throughout this environment, again, it became very prominent that other larger competitors, not just surrounding cities, but other states such as California, Texas, Oklahoma, Colorado, were providing a lot more than the city of Salina can provide to millennials, making them travel elsewhere for their needs, spending time away from our community and time away from the city of Salina. And so after reviewing all of this qualitative data, we came up with 6 recommendations that will be spoken about in detail in the following slides. You'll see that among these 6 recommendations, there's minimal variance in the percentages that they are represented by. This shows how important and significant each recommendation is in its own. And so recommendation number 1 is collaboration. To collaborate with partners in the community to increase diversity and affordability. Currently, the city of Salina has very minimal representation, minimal diverse representation promoted through the media, through the population, and through political figures. And when there's minimal diverse representation, and we talk about the millennials who fall into these categories, it makes them feel that Salina is not the place for them, making them stray away from wanting to make the decision to reside in the city of Salina permanently. And then we have new homes that are being renovated and created. However, these homes are becoming expensive, and millennials are not willing to make a big purchase such as those when they feel that the city of Salina is not going to provide that quality of life that they are looking for. The second recommendation is to advocate developments in the business industry to assist in providing more professional opportunities. And so what I mean by this is that millennials are looking to grow. When they think of a job, their long-term job, they want to be able to find a professional opportunity that they can grow in. And a lot of professional opportunities in Salina are entry level with no opportunity to grow in the organization. And so, for example, this provides great opportunities for the city of Salina to make partnerships with schools such as Kansas Wesleyan. Kansas Wesleyan, one of the largest majors there is the criminal justice program. And so this provides opportunities for the city of Salina to connect departments such as the Salina Police Department with the criminal justice program, to connect those millennials with professions in the city and the community. And millennials are really big on hands-on experience and firsthand experiences. They want to know, they want to see things, they want to know things, they want to experience them firsthand. And so when they can make those connections in the city of Salina, they're more likely to develop those emotional and personable connections that make them want to stay in the city of Salina after they graduate. And this qualitative data not only relates to the millennials who temporarily reside in the city of Salina when they come to school, but also those young citizens and millennials who are growing up, who are born and being raised in the city of Salina. They grow up and they realize that there are not as many opportunities for them as they might have think. It actually gives them more time to reflect on these lack of opportunities, which also make them want to reside elsewhere rather than our own community. And our next recommendation is renovations and developments, and targeting those renovations and developments in the city of Salina towards millennials. As mentioned before, there is a lack of and very limited nightlife experiences and professional opportunities. There's a lack of social experiences for young families, young citizens, young singles, and these are negatively impacting our community as a whole. We want to provide these opportunities for young citizens to be able to live that fulfilling life that I've had mentioned before. When we target entertainment towards these young adults, and not just entertainment, but other opportunities, they realize that we're not here just for their education, that we're here for a lifestyle for them to live. And we want to make sure that we're promoting those benefits of our city and aligning the benefits that we offer with the needs of these millennials. And we want to make sure that we can attract them in multiple ways and multiple outlets throughout the community. Recommendation number 4 is to develop and innovate an entrepreneurial culture within the city of Salina. What I mean by this is we've seen many local businesses and startup businesses come and go in the community. It's very difficult for these local businesses and startups to maintain a successful business. And when they fail to maintain these successful businesses, it aids the comment I made earlier of the lack of shopping experiences, which is decreasing our consumer spending in the community, which is hurting our economy and so forth. And when we don't have those shopping experiences as well, It also pushes these millennials to move to an online shopping experience, and again, elsewhere. And so we want to create better resources for startups and local businesses to be successful in our community so that we can aid those consumer spending needs with young millennials. We want to provide that support, and so that we are a supporting community, so that we can show them that this is a place of growth, that Salina does have a future for them to look forward to, and so forth. Recommendation number 5 is to increase community alignment so that we can create larger synergies. And what I mean by this is everybody in the community has the same end goal. We all have the same end in mind. We want the city of Salina to be a successful and great place for all of our residents to live. However, currently there is too much disconnect in the systems among our community. And so we need to better align and realize that we're all working towards the same goal. When we come together, we can make a bigger impact on millennials and the way that they perceive our community. When these millennials are coming in from other states such as California and Texas, Oklahoma, they have a preconceived perspective of Salina or Kansas in general, that it is a place that is non-diverse, it's a non-welcoming place. A lot of these millennials have a negative perception of how they see Kansas, eventually leading in how they perceive Salina, the community. And so we want to work towards creating those synergies so that we can make an impact on the way that they position the city of Salina in their own minds. And then recommendation number 6 is the use of technology. Technology is very minimally used in the city of Salina. It became very apparent when the pandemic hit because many organizations and businesses had to move to a remote platform or an online platform. Technology can be used for a variety of things. If you haven't noticed, millennials are constantly on their phones. They're on their laptops, they're on their computers, they're on their phones. It's as if they put them down, the world ends. And so technology is a great way to connect with these millennials and create those relationships with them so that we can show them a better experience in the community of Salina. There is very minimal brand awareness about who Salina is. There's very minimal promotion and branding on who we are as a community, what we stand for, what our purpose is, what our values and visions are. Millennials in the city of Salina feel that there is no promising future here, that we don't have visions. And we do, however, they are not being promoted in a way that millennials are connecting to. And so using platforms such as social media, media outlets to communicate with them is a great opportunity to connect with them and show them that we do have visions for our community, we do have values, we do stand for things, and that we want to connect with them. We want them to choose to reside in the city of Salina, and that we are a community that can support them and their needs and their desires. And so throughout our qualitative data, as we gathered this research, we focused, like I said, on the internal, customer, and external environments. We found that it was important to define these issues and make them clear so that we can take note on the needs and desires of these millennials. Millennials are, it's not all about them, but they are a very huge part in moving forward, and they are a huge part of any future of any community. And so we do need them for the success of our community. It's really important to align all of our needs and our goals to try and meet those needs and desires and not stray away from what we are succeeding at currently, but moving towards those things that will allow us to grow together with millennials and allow us to provide that community that they may be desiring just a little bit more. And that is my presentation. Are there any questions? Yes.
As you drill down, I don't know if you all were able
Mm-hmm.
to drill down into some of the issues, exactly what type of retail, what type of entertainment, you know, what is lacking in more detail where, you know, we could use this as a tool to start moving forward and try and attract some of those types of activities.
Make sure you repeat the questions so people online can hear that.
Yes, and so the question was if the research provided in more detail the opportunities such as the social experiences that we could provide to these millennials. And so in our data, we did provide more specific examples. Throughout talking to multiple millennials throughout this research, we did find that with the nightlife experience, we do have a place called Outlaws in the Community that some of you may know. However, millennials are looking more for that club feel. And although the city of Salina is a more traditional place, we do feel like those types of entertainment aspects can be implemented into the community. And so we feel as though we have a bowling alley, we do have a water park and a jumping area. However, these areas are just I apologize, I lost my wording. These areas hit just a piece of it, and it's not too as big of a expectation as they might have liked. Yes.
So I know you came here because of soccer from California.
Yes.
But you also made a decision to stay after you were here. And so what caused you to say, you know what, I like it here in Salina, I want to stay, even though I could have gone back home to my family and everybody in California? And how does that compare with maybe some of your classmates?
Yes, so that is actually a great question. I expected someone to ask this question actually, because I'm here talking about these millennials who are leaving, and I'm one who decided to stay. And so the question was, I'm from California. I decided to come to Kansas for soccer 5 years ago, and I stayed. And so why is that, and how is that different than my peers? And so for me, it was the connections that I made. Dr. Paul Headland became a mentor of mine, and this really heavily influenced my perspective of the city of Salina. He kind of guided me throughout my undergrad and helped me connect to other people in the community that allowed me to make those emotional connections that were really hard for me to leave. I started to realize the opportunities that were available to me in the city of Salina compared to a place like California. There are very limited opportunities in California compared to Salina for a young professional like me. They're just not as obvious. A lot of people think that these bigger communities and these bigger cities have so many people and so many jobs. However, they're really hard to get into. And so for me, the difference was, I think that someone took the time to actually reach out to me and actually become my mentor throughout my 4 years here. And so it wasn't a quick connection. It wasn't a quick decision that I made that I was like, oh, okay, like now I'm gonna live here. It was something that took time. It was something that Dr. Headland really walked me through and connected me with these other people in the community to show me that there are opportunities out here. And so I think the difference between me and my peers is that it's difficult to make a larger impact on more people than it is to make an impact on one. And that is the issue that is being discussed here today, is the issue on how are we going to make a larger impact to a larger group of people so that they can recognize the things that I've recognized throughout my years. Yes.
So if I follow up, it sounds like you just had another recommendation.
Oh, yes, yes. Mm-hmm.
And find ways to mentor them and integrate them into the business.
Yes, and that's part of one of the recommendations that I kind of mentioned earlier. So some of the largest majors at Kansas Wesleyan are criminal justice, business or the business department, and health and exercise science. Those are three major areas that students are focusing on at Kansas Wesleyan, which gives the Salina community a opportunity to make those connections, because we have a great healthcare system. We have some thriving businesses, and we have a thriving police department that can make those connections and mentor these kids so that they can realize that there are opportunities for them after graduation that they just might not be realizing as they're spending their time here. Yes.
So
Mhm.
Salina and changing. Probably the biggest change in Salina right now is the revitalization of downtown Salina.
Mhm.
From a millennial perspective, is that exciting, or is that really a non-factor?
So it was a slight excitement because it is a difference in everything else we've been seeing. However, I'm trying to find the word that I'm looking for. I apologize because there's a specific word, but it is not reaching its full potential is what I'm trying to say. And so it's like we're barely hitting the nail. And so although the renovations and the developments downtown are an exciting start, it's just the beginning. These things I know and we understand are going to take time, but those are the kind of developments that we're looking for. And so, and on top of that, we millennials felt, or even in the community of Kansas Wesleyan, that those developments, we didn't know they were happening until they happened. I think some excitement leading up to those developments would also benefit those connections as well. Okay.
Thank you, Nissa.
Thank you so much.
Our next speaker is Mitch Robison. He's the Executive Director of the Salina Community Economic Development Organization. Mitch, we look forward to hearing from you.
A special thank you to Paul, since he was going to be here and he did a great job doing this. Just a side note, as you're transitioning here, you put this on. This community was really down on your leadership several years ago. How many of you remember that? You guys came up on one time, no growth, no youth, and now you're coming up and you have leaders through the university motivated meetings. It's an observation that you guys came to me and were really upset at one point.
Good afternoon. I'm always hate to be the one either right before lunch, right after lunch, or the last one, but that's the way the hand was dealt to me. So glad to be here. I wish Paul was with us today. I took part and did, I don't know if you interviewed me or one of your coworkers, partners interviewed me on your study. So I'm glad to see the results, and I want to see more of the study you all did. So it's exciting. Well, we're going to wrap things up and kind of talked about some of the things that's been going on in Salina, and I want to talk really, it's more a picture show today. When we found out Paul wasn't here, I just expanded some of my items, and we're going to talk about some of the success, some of the issues. Obviously, the 800-pound gorilla in the room is the COVID, the impact it's had on the community. Eric should be up here talking about this, but I'll take a swing at it. You know, we've had successes. The hotel, motel, just as was discussed early in our session today, you know, has taken a real hit across the board with the job losses, and hopefully we'll start seeing that come back. And one of the first things we saw is, I'm going to give you a little background here. A year ago, this month we had the One Vision Aviation announce their location out at the airport, and started off, they got up to 100 people with their maintenance, repair, overhaul facility, and we're really excited about what was happening, and things were going very well for them. And then of course COVID came in, and we got into a situation where you saw pictures like this and pictures like this of airplanes all across the country grounded, and no flyers, no passengers riding. And obviously Jim Sponder, the president of the company, had to make a pivot. We were out there just the other day, and his partner said, we got to shut her down. We got to just close up for right now. And Jim said, no, we're going to fight through this. So he pivoted. He took advantage of having these airplanes here and worked hard with the companies to keep them in service. When you have an airplane sitting on the ground, you have to take care of it. It cannot just be sitting there. He had opportunities, planes could go out to the desert where you see, you know, thousands, hundreds of airplanes parked. By having them here in Salina, the airplanes were able to be maintained. They kept going through the process of maintaining the engines, doing startups, taking care of the aircraft, where when the call came, they could roll those planes off the tarmac and get them back into service. So Jim has been able to work through this. He had to lay people off. He's down into the 30, 35 or so range right now. But you're going to be hearing in the next couple of days that he's bringing more business to Salina. He's bringing his operation that was up in Iowa, bringing it down here. So we're excited about what he's bringing to the airport, and his partnership with the community, with Tim Rogers and the airport board has been very successful, and we look like he's going to really build that business back up and move it ahead. So right now, during these times of aviation across the country, Delta was watching the news just yesterday morning. It was, I think, a $5 billion hit they were taking. Huge number. So we're seeing it on a small scale, starting to rebuild here in Salina, and we're excited about that. Next up, we were really excited. August was a great month for us here. We had a week where we had 2 announcements. The first one on Monday was our Swans Foods making an investment of up to $600 million initially. First phase of it will be more in the $350 million range. And we're excited they're going to build. There's just, believe it or not, there's not enough pizza being made in the world. And Swans is going to help take care of that with this new facility. Currently, they've got over 500,000 square feet in that massive building that's been added on. I've been told it's been added on 80 different times. If you look at a picture, you'll see here, you can probably think, I believe it. Well, they're going to add 400,000 square feet. They're in the process now, if you haven't been out there, of tearing down one building. The old school gymnasium, the old college gymnasium is going to be next. Trees are being removed for where the new building is going to go. I've got some pictures you'll see here in a moment. But the job creation, one of the things we talk about is new jobs. But one of the most important things on this project in particular is retention of the jobs. What would happen to the 1,200 jobs here if this new expansion wasn't added on? I think your local community leadership, the city manager, the city commissioners realized that something very important is we had to protect those jobs by working with the company to make sure that new investment in pizza came here rather than going to some of the other locations that we're looking at. So starting up in 2022, there'll be 42 new jobs, and then 2024, they'll end up having an additional 183 new jobs. These positions, you can see the average wage is going to be a little over $65,000. Right now, to be on the pizza making line, the minimum amount is $20 an hour. So this is going to be going up, but these are going to require more technology. This is going to be a very automated production lines. Are starting with 2 new lines, and they'll run the length of the building basically. So they'll be able to keep it much more efficient. Maintenance, cleanliness is something that's very critical. Currently, they have to close the plant down, and the 3rd shift is all it is maintenance. It's washing, sanitizing, keeps them the food safe for consumers across the country. With this new production line, they won't have to do that every day. They'll be able to go a longer period between cleanups. So something that keeps them making more money, making more pizza. The local community, we had to, when you want to get into the economic development game, you have to play. And playing, you have to put incentives, tools up to help the company. And this is one, much like the downtown project where all the tools were used, this was the same thing. The city is issuing industrial revenue bonds. Normally, those are done over a 10-year with 100% abatement for the first 5 years. And then the second 5 years would be a 50% abatement. That wasn't good enough. We had to go 100% for all 10 years. Cash grants, the city has their own economic development fund. Out of that money, out of that fund, there was $650,000 invested. Out of the city's road and bridge fund, they were able to bring $900,000 to go to match with a Kansas Department of Transportation grant. So those is providing some street improvements out on the around the operation. The airport authority made some major commitments, provided working with K-State, was able to acquire the gym property and the 5 acres with it. There was over 9 acres the airport authority itself had that they donated for the project. As you'll see, that perimeter it's surrounded by streets, swans will be growing out to that. And then the former Pratt Industries building you better hurry if you want to go see it one more time, because it's being torn down right now. Competitive process. Yes, it was a very competitive process. We were competing against sites in Kansas, Ohio, and Texas with this project. So it was potentially something that we had to fight very hard for, and we did. This is the if I knew which button to push, let's see. Well, basically, this is the new building. This is the addition. It's on the west side of the plant. From if you were going toward the airport, you would go past the existing building, and then you can see the 400,000 square feet in that major rectangle there. And then there's additional, as it grows, there'll be additional expansions. This is another view. You can see the runway of the airport, and this is a great shot of how massive this building is. But it'll be the world's largest frozen pizza manufacturer, from what we understand. This is another map that kind of shows where that is. I'm just going to run through some pictures. This is the governor, the CEO, Demetrius. Demetrius is a native-born American, but he's Russian heritage. So nobody could pronounce his last name. It got butchered until everybody just said, he laughed and said, just call me Demetrius. That's my first name. Call me that. But this is just a group of local citizens or local leadership, and Senator Moran is here on the end toward me, and several others. Again, this is the mayor making his comments. Here's the Governor Kelly. And then here's a hodgepodge of the Senator Todd Clark in the center there, who's overall over this operation, and then Demetrius here on my side. But just another little picture here of, I think they were talking about wearing masks right then. I think that's what was going on. So that was on Monday. On Thursday of that week, we had our second announcement. Great Plains, Kubota, announced a $53 million expansion, which is going to allow them to acquire the former Phillips or Signify facility in July of next year. At the end of July, they will acquire the building, which is currently 750,000 square feet, which is way more than they need currently, but it'll give them a place to grow into. So 80 acres. So when they acquire this building, they're going to start building a new model. But first, let's talk about the jobs. First year, there's going to be a 30 new jobs added into the facility. And their average wage, with mainly it's more upper end management folks, will average over 35 an hour. Second year will be another 60 jobs, an additional 60 jobs added. Again, they're in the $27, almost 28 range. And then there'll be another 40 jobs with the third year, and there's somewhere over $26 an hour, their average. What they're looking at as the project moves forward, potentially there'll be another 250 to 300 jobs brought in to help this plant. The Japanese, Kubota, has seen a real ability of the engineering staff and the production facility here to make products that they never envisioned could be made here within the plant. So currently, this is what's going to be built here. This is the new. I don't want to say a Bobcat, because that's kind of like Kleenex. You say a Kleenex, you think of you say Bobcat. Well, this is what you're thinking of. Don't think that. Think of a front track loader is what they're going to be building here. And I was in Manhattan the week after we made this announcement. I looked over at a construction site, and there was one sitting there. They were using it there on their project. But this is currently being made in Japan with parts supplied from China. Those parts will now be coming here, as well as being locally made parts here. But this is Linda Salem, the president and CEO of Great Plains, making an announcement. I'll just run through a few pictures here. This was, well, this is a little quicker. This is Project Gemini. This is the announcement that was made. This was a project that was about 2 years in the making. The Swans project was about 4 years. It took, and actually longer, but 4 years, 2 years of a lot of intensive work on that one. This is a little bit faster, but this is David Tolan, the upper left-hand is head of Department of Commerce for the state, very key player. Down here are some other key folks. We're going to see another picture here. This is the loader, another one of their products, but this is being made in Abilene. This is their ride-on loader, which is a little bit smaller, great for if you needed to do a construction job in your backyard and you had to get through a gate in your fence, or if you were working inside. So this is another, there'll be a series of these produced in Abilene, and then the big brother will be our machine, will be produced here in Salina, and we hope to see a series of those machines develop, because when you have a 750,000 square feet building, you've got room to grow. So we're real excited about that. I think, yeah, I think that's there's just another shot of that. So if we want to talk about, do a little Q&A now, we can do that, or I can take the questions of, okay. All right. We all ready to go back to work, or?
And those were 2 home runs, obviously. That doesn't happen this year. To have 2 back-to-back is pretty amazing. I think that's a timing deal, but is there an opportunity for another one coming such on that scale in the next 2 years? Or is that just a generational thing?
No, I think the economy is picking up. I think we're going to get through the virus now. We're going to have to just live with it for how long, we don't know. But what I'm seeing, what I'm hearing from consultants, they see us coming around. Now, we've got an election to get through, and how that will change things depending on how that turns out. You know, we'll see. But right now, it looks to be pretty strong. We're talking to some companies right now that are big projects that could have, you know, a big impact. But, you know, we're at the very early stages. It's kind of like a elimination. It's kind of like you're dating, you know, the dating game. You're going through that process. The company's got to decide whether or not they like you or not. And they've got suitors all over the country, all over the world. You know, the Kubota project could have gone into China. That was one of the competition we were working against. So, you know, there's a lot of competition right now in this. And as I said earlier, you know, if you want to be in the game, you've got to put forth the incentives and the investment locally. And I think we were talking about the downtown, which could have been another segment of the discussion. You know, the city has made a major investment, and then the private sector has followed up. The building right next to your operation, you know, who would have thought that that hotel would be doing the things it's doing already, the restaurant. The Yayos folks have said this has been the greatest startup of any of our restaurants anywhere within their company. So.
I'll not argue with you, but I think the private industry started, I think the city followed.
Yeah, yes, I would agree. Without the private sector money, there would have been no reason to make the streets look pretty. Okay. Anybody else? Yes, sir.
Mitch, you hear from the national park
Yeah, well, there's it's the same problem the rest of the country has, really. Labor. We've got to do a better job of providing a workforce, and whether that's working through Salina Tech, through the local colleges, through the high schools here, we've got to provide a better, and we've also got to get the people to move here again. And part of that goes back to the housing. Most definitely, that's a major issue is when we have people come here, they say, well, where my workforce, where are they going to live? Where's my management going to live? And, you know, there's been some improvements. Lee building, you know, is beautiful, beautiful facility, but you know, we need all three of those phases done now. You know, there's some other things going on in town, some apartment discussions going on. Hopefully they'll come along, but it's a process that right now, those are the two biggest things. I've been doing this over 30 years. 5 years ago, I never would have thought that this would be such an issue that it's become, because it is really driving a lot of the decisions on the company is where can I get my workers?
So with that, let's have a little bit of dialogue.
Okay.
As you're talking about Swan, looked up unemployment data for Salina County. Right before this, you had about 900 people who were unemployed before COVID. COVID hit,
Right.
went out to almost 3,000. So you
Right.
had an extra 2,100, 2,200 people that were laid off and were unemployed.
Right.
And now you're already back. It just keeps driving back down. You're around, you have less than 2,000 people that are unemployed in this market. You always have people unemployed.
Yep.
So just friction, you have about 1,000 people just physically sitting in this one county. I mean, how is the labor market going to solve the jobs they're going to create?
Right.
Are they moving in?
Well,
Are
I think
they training or?
I think it's going to be a combination of things. Market is how big of a market, you know, it's not just Salina County, it's our labor shed that we reach out, and by having I-70 and I-135 and 81, you know, we've got a great east-west, north-south traffic, even except when a semi falls off the interstate. That doesn't help any, but like the other day. But I think, you know, that's part of it. But you're right, it's going to take a training. The Swans, you know, it's going to be a higher skilled workforce. And by having those jobs, you know, that will attract a higher skill level of employee. Same thing with Kubota. Kubota is going to be a different worker than what they're hiring right now. So, you know, it's going to be more high tech, no doubt of that.
So I don't understand the jobs in this one. You say it's higher tech. So, but this is on the food service side. I think the closest market on the food service, you get closer to Topeka that has the food service higher tech labor market.
Mm-hmm.
And I'm just thinking off the top of my head without looking at a map, but you know, companies, is that kind of where you're going to get some of the higher skilled ones, or is it going to be training through programs here?
Well, I think it's going to be both. I think we've got to look at what we can do locally, and is our Salina Tech guy still here? I think he's gone. But you know, that's going to be one of those things, is we've got to work with the companies have got to want to work with the community, and that's part of it, is that coming to the table and saying, well, this is our need. Now we can talk about it, but you know, are they really ready to bring in outside parties? And is the school really willing to work with the companies? And I think they are. Work with the companies and provide them, you know, what are you really, you know, what does that class need to be? I mean, we talking refrigeration? Are we talking robotics? What are we talking about? Because it's a big change from where they've been historically. It's not been that type of a employment at Swans.
Let's talk about the wage. Just for perspective, do you know what your per capita income is in the county? Anyone have any idea? You threw out the number what they going to make there. Anyone have any idea? Per capita, not household. Yeah, it's even less. Your per capita was $27,737 per person. And then you got a job all of a sudden that's over 60. Your household income is 50-some thousand. From that measurement was from the census side. So there's different measurements.
Right.
Physically living or what they're making. There's migration coming in and out.
Yep.
Their incomes can go up if I look at a different state set. So that significantly pushes up per capita income and significantly pushes up household income. I mean, that's definitely a price signal to make people move here for this job, right? I mean, you can have an influx of people coming in for that job. That's not, can see that. Other thoughts on competition of existing companies having to work against them, or is
Oh,
it
it's,
a different labor market and they're not going to have to worry about it because it's so different in skills and
well, it's definitely going to be competition for the local workforce. There's no, and the regional workforce. I didn't mention Fort Riley. Fort Riley's another aspect. Shane's doing an excellent job of bringing those folks here that are coming out of the service. So that's something that a lot of other communities have done a long-term job of recruiting those folks. We've got to do that as well. But yeah, the companies here, you know, we've been under the pressure for the last 5-6 years, maybe a little bit longer. And we've been in that 3-4% unemployment rate, which, you know, it's a tight labor market and it's only going to get tighter. So a lot of the companies, some of them are not going to be happy. Some of them feel like, well, it's good for the community. It'll help everybody attract more people to come in.
not knowing the details, it sounds like this is an opportunity to bring more people into this community and really, there'll be upward mobility for those people who are existing here, right?
Right.
Labor and different manufacturing. They'll get a new skill, move up and have a whole new lifestyle from something like this.
And the trailing,
Up a position for someone else, but this is more of a price signal so higher that someone from Wichita who's unemployed that's on the robotics side, or someone from Topeka who was doing lathes, who knows all the, you know, mechanics and precision measurements, things like that, can go in and solve those problems. Than it is someone who already was here.
right. It's hopefully we'll kind of reverse the trend. The trend has been going, people from here going to Wichita to work. Maybe we can bring some of those folks back. And we have with the aviation, with One Vision, we saw quite a few people that had either been here before, lost their job, went down to whatever manufacturer it was in Wichita. Now things have slowed down there, so they're coming back. So,
is this community even ready for that amount? I mean, this is a significant shift in income. I mean, new income, new spending, new housing. I mean, it should change. Is the community ready for that kind of?
That's a good question. That's a very good question. Yeah.
What's the build up?
Bring them all. If you import the skill set, you got no place to house them. So you got to grow that skill set as well as grow housing.
Yep.
You build housing, you got to have labor to build those housing. So you're kind of stuck in a catch-22 situation.
That was the question I had about construction workers earlier. Is you've got to have all across the board. You've got to move things up, and it's a difficult thing.
Yeah. If you have high-skilled labor jobs, somebody's going to have to fill them. Okay, but where are you going to get them from? You got to suck them from outside, which then you got to have all those other social issues that you brought up. Okay, that they're not going to want to stay if they don't have the lifestyle that they're looking for. Okay, so that all has to happen, and all those things that need to have those people stay here require more people.
It does.
Okay. We don't have more people. This place has been, you know, stagnant for how many years?
Yep. It's been a flat line, that's for sure. Yeah.
So let's switch a little bit. How has the pandemic really impacted the economy?
Well, it's been just like you started off with. It's been the service industry has been the one obviously hit the worst. I mean, the hotels, motels, restaurants initially were all, you know, we've got people that are running, you know, well under half, under 50% for their occupancy. That impacted the city in terms of revenue. They've done better than their first estimates on sales tax revenue. Has not been as bad as they had predicted, which was good. But I mean, you nailed it. It's the lower income folks who don't have the training and the education to do some of those harder jobs. So and we've seen, hopefully, you've seen some increase in your growth. I know talking with Greg at Salina Tech, I think his numbers are gone up. The numbers at K-State have gone down a little bit, but they've got a bigger freshman class than they've had in several years. That continues to grow. So hopefully during this time of a downturn, the people go back and do more in terms of education. But I think it's very similar to lots of other communities of our size. It's across the board. It's a lot of the people in the haircutting business, the service business, that's been shut down by restrictions and people's own fear of not going out to their dentist or their doctor to get whatever procedure they might need. They're saying, "Oh, I'm going to wait," but those folks, they were all impacted as well.
Just to pause, I mean, if you're growing, this is a different trend than what's going on at other universities. Just it's a big dip. Do you have a comment on that one? Because
We're up 12% of enrollment.
wow, grow over year. And last year was a positive year, or it was down. So you're 12% on top of a growth year prior to that. So I mean, that is unusual. Is there any? Do you have a perspective of why?
I think size and location. We're a safe place to be. Our activities are going. We're full teaching mode. We're not doing remote. We have access to do hybrid if we need to it, but we're on ground. We're in class. And students who are coming from California, Texas, which is 40% of our students come from those two states, it's a healthier, safer place to be here.
So you're
in our job, and my job, I believe, is to go back to Nissa's point, is to introduce students to Salina. It's Salina's job to convince them to stay. And so it's getting this community involved in Kansas Western, K-State, and Salina Tech to make sure they're networking, knowing the opportunities are here and why they want to stay. One of our best things we do is our host family programs, is connecting community members with our students so they have a relationship that makes them want to say, this is the place to stay.
So that's massive growth. I mean, just say other universities are declining. K-State struggling, KU struggling.
Separate from the pandemic.
Yeah.
Enrollments at universities are declining all over the country, and especially small colleges like Kansas Wesleyan. A lot of them are on the verge of shutting down. So that's amazing.
That is really a demographic shift.
Oh yeah, it's about a demographic shift. There's just fewer college age students.
And even more of an issue here in Kansas because this pipeline locally is not there. I mean,
Right.
Most of our kids are moving out and going out to other universities, so that we have less that pipeline to really fill in. So I had to pause there because that was a significant point for you guys all to take away. I mean, it's something completely different than what's going on anywhere else in Kansas or other universities. Sorry. What about manufacturing? You were hitting the other ones. How did manufacturing get impacted by COVID? And,
knock on wood, overall, very well. I mean, we've had some changes. One of our companies that's in the bus line business, they were sold to another company. So that's a question mark. We've been feeling pretty positive. They're going to continue and that business will grow. We had a company that was in Chapter 11 for, I don't know, 6 months, I guess, and came out and were bought by another company. And they're investing money into that plant. So that was that could have gone bad for us, but that's over 800 jobs that were maintained because that's a good quality production facility that makes some of the best batteries in the country. So those were two instances, and then we've added these other expansions. The One Vision, they did take a hit initially, but they're bouncing back, and we'll be adding people. So I think overall on the manufacturing side, a lot of it was steady as she goes, and work through those issues of who's taking care of the kids for the employees. Well, the schools are closed down. So
have there been any programs to handle that?
There hasn't. I can't say if there's been. I mean, there's been some school-related programs working with that, but outside of any of the private companies themselves, I'm not aware of any.
As I went around last year to a lot of communities, it was daycare costs and regulations that were preventing people from being in the labor market. And since you were already tight before, you're staying at that maximum of this manufacturing side, and now you're about to add more. I mean, the question is, how does the community respond of that daycare solution being one of the potential ways of dealing with the demand for that? Because there's some people would like to go back to work, they just can't because of the costs. Costs are just very burdensome now with state regulations. Even independent, smaller ones are just really hard to get people in. Even if you do it at mass scale, it's hard. It's not very cost effective. Low profit margins, a lot of risk, and particularly now, even more risk. But before this, there was a lot of risk financially for daycares to be out there. And so that's been hindering a lot of labor markets across the state. I had at these events, daycare workers coming to them because they were looking for more opportunities
Answers.
last year. Because they're like, we got some demand, how do I even make this work? So just bigger perspective.
Yeah.
If
There
you find a
was-
solution and you got a lot of attention on demand, that could be another one to think about as
Yeah.
a community.
There was activity before COVID hit. There was a direction coming that people were working on some daycare issues. We had a group that went down to another community that had some ideas on how to solve some of the issues. And then boom, it kind of just derailed everything with that. So
So still with the manufacturing, and you may not know this, but it's something I'm super worried about. And since you said there hasn't been much slowdown for these businesses, any trade issues, any problems with supply chain, and in particular, like the just-in-time solution, right?
Mhm.
Before it was everything had to be there just in the right time.
Right.
Now with all this disruption, some companies in the state kept saying, I can't get the part in here, and then I can't get it to someone else. So they're trying to look for more land. I don't know if you're hearing no stories about needing land, people are here.
we have land here, so we could definitely take care of those issues. I think it's there was some discussion. There were some companies that depend upon steel coming out of China. They were getting impacted due to the tariffs that were put on the products. Hopefully that'll work itself out. They're surviving, but it is a cost issue for them. It's causing them to jack up their prices. And I think right now there's a lot of those folks that deal with products coming in from Japan or China or wherever. Those boatloads of containers are still slow getting unloaded at times, and that impacts their supply chain. You're right.
Early on during the pandemic, it was hard to get any. Whatever you had, you just made do. That was probably true across not only manufacturing, but everywhere. It seemed to get a whole lot better. Now we're seeing just selective outages. Steel is one of them. Getting steel into things is difficult.
Yeah.
Now I work with galvanizing. I work with a lot of steel folks, and we've been above forecast essentially for the last several months. So as far as the Salina, the virus goes, has not impacted significantly our ability to produce, but it has significantly impacted our ability to use the labor shortage. We could use 20 more people tomorrow. We just can't find them. Yeah. So that was a little bit something I was interested in listening to you speak about the local area and how we have labor available. This is my experience here in Salina. Where it's going to get even tighter and more difficult for us to attract quality labor, it seems, as we go on the next few years. That's going to be exciting.
I had a question. How many people tried to buy either a refrigerator or a stove or a washer and dryer over the last couple of months? You can't get them. You go into Lowe's, they may be on the floor. Well, we can go get one from our warehouse, and it'll be 2 weeks to 6 months. And I was without a refrigerator. Of course, you can't tell it. I didn't cut back my eating. But it was 3 weeks before I could get one.
Just in time is out the window.
Yeah.
I mean, it is, you order it, it comes in whenever it shows up. And the selection is lower because you get what you get.
Yeah.
That's absolutely true. We've seen that since the beginning. I think it's loosened up considerably since then, but it's still a factor. Absolutely.
Mm-hmm.
So I shared this, I think last year. One of the things that I was talking about is some of the migration when people move. And just so you know, people move to Kansas and live here because there is a job, right? And so when the part I kept pushing back the previous years, because wages were not going up very fast in Kansas in the previous years. So when we say we had a labor problem, it's because we didn't have an increase in wage. We had an increase in wage problem, right? That was the price signal to tell people to come or work, or if they're unemployed, sitting at home, to come back into the labor market. This is going to give that motivation behind to do some of that and to get people to move in. So I guess if you ask businesses, and I looked at this, I think I shared this last year, 50 years ago, 20 years ago, 100 years ago, look at news and economists, they said the exact same thing. I can never find the people to fill the job, and there's not enough. I mean, that hasn't changed. But when you look at just migration, when I look at the high level, people will move in when there's jobs and the wages are behind, right? That will make them move, and you will grow. So counties that grow faster is because they have an industry that's driving that. And this could have a spillover effect. Just keep in mind, that's going to have a lot of new cash. That new cash is going to go to retail. That retail is going to increase the quality of life. And this is going to be the easier solution than other, the city themselves is trying to fill the bill. You're going to have the flow of cash to say, now a general economy is growing, it takes pressure off of their existing bonds. You can make new bonding and keep up with the injections like that. And that can be self-perpetuating, right? You're seeing the growth of people will long term. A question or two from the audience?
Jeremy, one thing that we're struggling with right now is by and large skilled labor, high-end jobs by the metric you're using. Our challenge being people come to this community right now for the pandemic. They're fearful of leaving where they are, selling a home, a trailing spouse. Is there a job for living here? So we're not getting lots of fights for positions, even though we've got positions available. I wonder if that will translate here in these other conversations with folks. It's not just the main job, it's also the trailing spouse job as well. Are they here?
And that always becomes an increasing more of a problem the smaller the economy, right? There's less labor, so there's less flexibility for the spouse to fit within that labor market. So, but you're not the small, this is a good sized town, so you have some capacity to do it. It just, maybe when the economy starts to improve and open up, those jobs are more abundant in the other sectors that will make it a little bit more fluid with that migration, right?
Eric, why don't you?
This has been outstanding. I really like the give and take. One of the things that hasn't been mentioned today that is huge. We started back in 2014 and before. How do we retain that quality of life you're talking about? We started with the downtown and the river project, jumped downtown, and we got a bond approved. The money's been going in every year. The Corps of Engineers is behind because of COVID. We're going to have 6.8 miles coming with 2 blocks of downtown with hiking trails, biking trails, canoes, kayaks. That's going to be dredged. You talk about quality of life. And all that money that people are buying and spending over 150 million in a 4-block area, that is all going to fill in and head towards the river. It is huge.
Yeah.
That's one of the reasons some of us have been more positive than what the numbers are showing the last few years. Salina's about ready to pop.
So you're saying you had some of the capacity there ready for some of those growth, for even higher end growth. So that's good. So part of the issue I heard earlier about housing and all that matching, you've got. I didn't hear all of it. I don't know what all is going on in the river development, but it sounds like you have capacity for some of the growth ready for it to happen. So that's even better, right?
And we have some old money families that believe in Salina, and they're in the background that are continuing to invest, which is exciting other people to come in and say, hey, we want a part of this. And there is a lot of money being put in speculations, just buying old buildings and fixing them up. They haven't seen what's going to happen yet, but there is a lot coming. It's exciting.
Yep. Eric, why don't you or Renee give us a couple minutes on what Imagine Salina, what you're wanting to do with that? And I think that's, to me, that's a big piece of where we're headed and what you all are going to be able to help the companies with the attraction process.
Yeah, as all of these topics have been discussed, childcare, housing, these projects, we've been, as a community in the background working on these things for 5 or 6 years. And that's part of Imagine Salina is our, basically our workforce recruitment retention effort. Private businesses got together and raised about $1.6 million on this effort. And it's really geared at showcasing what Kent has mentioned, what you have mentioned, what others have mentioned, what's going on in Salina. So it's the arts and culture. There's another big piece coming on downtown, the mural project, and some other projects happening to kind of increase this buy and bring Salina up to what millennials are looking for, hopefully. So that's really that gear piece is retention and recruitment. The other big piece that we've worked on over the years at the chamber and through other partnerships is this career and technical education pipeline. Going so far down into the junior high level now at this point, and really starting to talk to students about understanding what exists in Salina and what a career looks like, and then connecting those, changing the career and technical education pathways at the high school level, connecting them to the post-secondary levels. And so trying to create this, like an escalator for stories. You can get off with a certificate, or you can go on to a Kansas Wesleyan, or you can go on to a master's program, whatever it may be. But having these options that these educational partners are producing certificates and post-secondary opportunities that feed right into our companies here in town. So that's another piece of the overarching event Salina piece as well. But it's really this digital impact too is what we're pushing with Imagine Salina, is utilizing that and trying to put it into the millennials' phones and into their faces that way. So that's part of what's been working in the background. And we just did some videos and a lot of different things that we're now going to really start pushing harder on to showcase Salina.
Any other comments? I think we're out of time. We're over time. All right, thank you very much for coming. I'll turn it over to you. So what?
Well, thank our panelists today, and thank everybody. I wanted to mention here about the economic outlook team. That's not something you're aware of. I'd encourage you to learn more about it. The team was established in 2010 across industries and across the state. The team meets quarterly to discuss local economic conditions and outlooks affecting their community. Members receive data specific to their community and share in a dialogue about respective industries. Here, I'd imagine what we talk about today is happening in those economic outlook teams. So enjoy this conversation. I encourage you to get involved. Jeremy,
Thank you for everyone who's online, and this concludes the event.